Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Ross Bhappu, who's the partner and head of private equity mature funds at Resource Capital Funds, who are a mining-focused global alternative investment firm and has been in the private equity mine investment space for over 25 years. And they've been partnering with investors and mining firms to build strong, successful and sustainable businesses and that strive to produce superior returns for all its stakeholders. Ross has a degree in metallurgy and a master's in mineral economics, with an extensive career spanning over 35 years, providing both technical and financial valuation and support in project identification, analysis, development, valuation, project finance, M&A, and sourcing capital for both private and public markets. He's been with RCF for over 20 years and is here today to tell us a little bit more about RCF and what they do. We're going to speak about the current financial climate within our industry and how you might be able to get into private equity if you want to sort of change your career within the mining industry, plus much more. Ross is also going to be attending Europe's largest mining event, which is Resourcing Tomorrow, formerly known as the Mines and Money, in London, which is taking place on the 28th to 30th of November. So literally in probably 3 or 4 weeks' time. It's a great platform for the entire mining value chain, fostering learning, lively debates, and providing valuable networking opportunities. So please register, get some tickets now. If you look in the show notes or if you're watching on the YouTube channel below, you can get some discounts on tickets if you put the code DIGDEEP10, which is all included in the show notes of companies. So go and get your tickets now. So after all that, I want to welcome Ross to the podcast. How you doing, Ross?
Doing great. Thanks very much, Rob. I appreciate it and appreciate being invited to participate.
Yeah, and I appreciate your time. And as we were speaking off air, you are a avid listener as well, and you've listened to a few of the podcasts, and now you're in the hot seat. So I wonder if you can, and I'm sure a lot of our audience will know you, but for those that don't know you, I wondered if you can just give our audience a little bit, tell us a little bit about your career and about your background.
Sure. No, thank you. I appreciate that. Look, I got exposed to the industry through my father, who was a professor of metallurgical engineering, and I followed in his footsteps, decided to study metallurgical engineering. I actually did a bachelor's and master's in metallurgical engineering, decided pretty early on that I loved the industry, loved the technology, but I wanted to be on the business side of the business. And so I then went and did a mineral economics degree, and I did a PhD, not a master's in mineral economics, and really it opened the door for me to get involved on the business side of the business. So I started my career with a company called Cypress Minerals Company. Cypress was acquired by Phelps Dodge, and Phelps Dodge, of course, was acquired by Freeport. And I spent about 7 years both in technical and financial roles with Cypress. Then moved to Newmont and spent 7 years with Newmont as director of business development, really focused on M&A, but got to work on the big Batu Hijau mine, both at the feasibility study level and then marketing copper concentrates with our partners at Sumitomo. So that was kind of a whole new realm, a new world for me. Went off and got recruited to run a little junior company for about 3 years and then got to know the team at Resource Capital Funds in their infancy and joined at the beginning of 2001. So, it's coming up on 23 years that I've been with Resource Capital Funds, and yeah, it's been a fantastic period of time. The mining industry is, as you know, is very cyclical and has gone through interesting times over that 23-year period. Resource Capital Funds started up in 1998, so around 26 years ago. And so we've seen a lot, we've invested in a lot. So it's been a really interesting time and a fun time to be in the industry.
Yeah, so I just wondered if you can just tell us about resource capital funds, a little bit about the history, and obviously you've been there, like you said, in the early days, and what the company does and the types of groups who you invest with, and the types of companies that you put money into.
Yeah, so Resource Capital Funds, as I mentioned, started up in 1998. We pioneered the whole concept of private equity for mining. We were the first one and the only one for many years that did private equity in mining, focused on really initially funding feasibility studies. And it was, we'd find that a mining company could go out and raise money to do their exploration, but once a discovery was found, quite often it was quite challenging for them to raise money to do their engineering studies. So the creation of resource capital funds was really around funding that engineering work to get them to a feasibility study. On the back of the feasibility study, they could go off and raise money in the equity markets and the debt markets. Over time, what we found, though, is that you really had to stick with these companies further to really participate in that value creation. And so we then ended up raising larger pools of money that allowed us to actually help fund the construction and the building of these new mines. And so so over the history of the firm, we went from financing engineering work to today where we're funding construction of new mines. Over the 26-year history, Resource Capital Funds has invested in over 200 mining companies. We've invested in over 50 countries around the world. We've invested in over 30 commodities, so dotted all across the periodic table. So we've had a tremendous amount of experience, and we've expanded our breadth of investment to go, from exploration all the way through to buyouts of existing operations. So really, we run the complete gambit of investments, and we've had had a lot of experience in lots of different jurisdictions, lots of different parts of the world, lots of different commodities. So it's been a great learning experience, but also a great experience for our investors, for our limited partners that invest with us. The types of investors that we have are quite unique. They're firms that are looking for differentiated returns. And so we get a wide range from university endowments to charitable trusts and foundations to family offices. We have some pension plans, both corporate and state. We have a couple of sovereign wealth funds invested. So it's quite a diverse range of investors, but they're all looking for differentiated returns. Where can we add what they call alpha, the non-correlated returns to the industry? Non-correlated returns to the general market. And so it's something that we've offered, and we're very pleased with how that's gone over the years.
Well, and obviously we mentioned you've been with RCF for a long time. What sort of jobs prepared you to do what you're doing now over the years with the company? And what are the different roles that you've played with RCF?
Yeah, so I started out after my bachelor's degree, I worked in the Sierrita mine. It's a copper mine south of Tucson, where I was involved in just general early engineering work, and it was quite a unique opportunity, great way to learn about just how a mine works, what's involved in mining, and then how does the mill work, how does the crushing plant work. So learning the intricacies of how a mine works was very valuable. Then working for companies like Cypress, and I had two different roles. I built financial models for investments that we were making in Cypress, but then I also got transferred to a copper smelter, and so I was on the feasibility study team to build a new copper smelter in Arizona, and then spent 3 years living in Miami, Arizona, and being a part of the operating team to operate this new technology of smelting, copper smelting, which was a fabulous opportunity. And at a pretty young age, I had quite a large number of people reporting to me, got to have to deal with HR issues, deal with both a maintenance team and an operations team that had different demands. And so you learn a lot about the sector. And then moving to Newmont, my roles there were really focused on business development. So it was looking at merger and acquisition opportunities. But one of the exciting roles I had at Newmont was commercialization of new technologies that were developed. Newmont has this fabulous laboratory and research and development system, and so they were developing new technologies broadly and trying to figure out, what do we do with them to commercialize them. And so I got to be a part of that, which was, again, great experience. And then finally at Newmont, when we were building the Batu Hijau mine in Indonesia, we partnered with Sumitomo, and I was asked to be a member of the marketing team for the copper concentrates that we were going to produce. And so I had a chance to go off and travel all over the world, meeting with different copper smelters with two other people from Sumitomo, and the three of us made up the marketing team. So again, a completely different sort of exposure to the mining industry and an important aspect of it. And on the back of that, I got recruited to run the little junior company, and that was a different experience altogether. I had to worry about how are we going to make payroll each month, and how are we going to fund ourselves, and how are we going to, who are we going to raise money from in developing this project. And that prepared me really for joining RCF then, and when we're looking at a project, and as I mentioned, we've invested in over 200. So when you're looking at a project, you've got sort of the experience to look and ask the right questions when you're doing due diligence to really try to understand what the key issues are that they may face as they're developing their project. So it's been a really I felt like I was very well prepared coming into this role to be successal at RCF. So I joined RCF, like I said, at the beginning of 2001. My role there was initially as an investment manager, looking for investment opportunities, managing investments that we had. I've had different roles as a deal team lead, and all the way up to running the private equity side of our business. And I was responsible for a fairly sizable team with our flagship fund, which was the private equity fund. We have three other strategies within RCF. We have what we call the Opportunities Fund, which focuses on earlier stage and less control type positions. We have a Technology and Innovation strategy, which focuses on new technologies for the mining industry. And then we have a credit strategy. And the private equity side was the flagship side of the business. And I've gotten to work with some fabulous investment professionals that helped me build that side of our business. And we've had a great team to do that. So it's been a fun time.
Well, what differentiates RCF from other mining focused private equity firms? And what do you attribute to its success?
Yeah, look, I think I think there's a number of things. One is, not only have we invested in over 200 companies, but we've exited over 150 of those investments. And I think it's one thing to make an investment in a mining company or a mining project, but it's another thing to exit and make money out of that investment. And so we've had tremendous experience doing that. I think one of the differentiators that's allowed us to be successful is that we have very strong technical capabilities, and so we have an in-house team of technical people that are very strong at analyzing geology, mining, metallurgy, and they're dedicated to just the technical side. They don't get involved in the investment. They help support us on the investment side. So, we think of them almost as an internal consulting group, but it's our own in-house technical expertise that we know that the quality of the work that they're going to do. The other thing we've brought in-house is the economic side. It's the commodity strategy side. So it's understanding what the macro environment is doing and how is that macro environment going to impact the supply and demand for minerals going forward. As I mentioned, we've invested in 30 different commodities and over 30 different commodities, and each one has unique supply and demand characteristics. And so, when we get involved and when we make those investments, we really need to understand, typically our hold period's 3 to 7 years. So we're thinking, okay, let's say 5 years out, what is that market going to look like for this commodity? And what does that mean for our ability to sell this asset at that point in time? So that's an important part. And then we have a large in-house technical services, a large in-house legal team. And then very importantly, we have an in-house team dedicated to ESG. And so, from day one, 26 years ago, we've been focused on how do you build these mines responsibly and sustainably. And that's been a big part of what we do. ESG it feels like it's almost taken on a huge role in its own right recently, but it's something from day one we've had to do. With the type of investors that I mentioned before, the last thing we want is for any embarrassment coming back to them or anything to damage our reputation. And so, you have to build these mines responsibly and sustainably. And again, we've done that from day one, but now we had to have a dedicated team in-house to help us really evaluate and ensure that we have that social license to operate when we're building a new mine. So it's quite critical to what we do.
Yeah. Obviously, you mentioned lots of projects that you've invested in. Is there a particular process that you go through when you're analysing a particular project, then when you invest? And obviously, what you just also mentioned about forecasting maybe 5 years out, that must be pretty difficult to forecast that far out. Is there a certain, obviously you can probably look at history, but is there a certain, again, process or model that you look at if you're forecasting as well?
Look, I think, so let's start with the first one, the process that we go through. It's a very regimented process. And we've actually put together what we call the investment decision-making process. It's a white paper that we use. And when we recruit a new person to the investment team, we really hammer home with them that this is the process that we follow. And it's like I said, very regimented. It starts with desktop due diligence. It then includes a site visit. It includes then, looking at all the technical aspects, the financial aspects, building the financial models, doing the market analysis, the ESG analysis. Our investment committee papers can often be 100 to 200 pages long, where they cover each of these critical parts of the investment in great detail. And then we look at how are we going to exit this investment. And so to your second part of that question, we have our commodity strategist, commodity economist really help us evaluate what does the market supply and demand balance look like. And what I'd say is there's fantastic data out there that helps us look at the supply side. So I think we have a pretty good handle on what new supplies are coming on the market over the next 3 to 10 years. What we have less confidence in is what is the demand going to look like, and that's where you have to look at these different forecasts of EV production, for example, or through the energy transition, what is the grid demand for various minerals going to look like? What is the product mix going into batteries going to look like in 2 years, 3 years, 5 years? And so we look at all these different statistics and different data sets and really feed that into various models to come out with what we project as a forecast. We use stochastic analysis in our financial models. So we're putting probability distributions around each variable, whether it's a grade of the ore or metallurgical recovery or commodity pricing. About 15 to 20 variables that go in the financial models are built with probability distributions. And so, instead of getting a single number that here's the NPV or the IRR of the project, we get a nice curve of what the probability is to achieve a certain NPV or IRR on the project. And that really helps us when we do our risk assessment, like what is the risk here? What are the key variables that we have to try to mitigate to manage that risk? And so those financial models are very, very detailed, and we spend a lot of time making sure that they're accurate and they're informative.
You mentioned obviously you've been involved in sort of 200 projects. What are some of the most memorable transactions that you and RCF have been involved in?
Oh, we've been through so many. There's way back, we were the first Western investment firm to build a new coal mine in China, for example. That was really interesting. That was at a time when China was looking for not only Western or for financing, but they were looking for safety standards and building mines more safely. They had a horrible record of safety statistics in the mining industry in China at that time. And they were looking for technology. And so we brought all of those to the table and had a very successful investment in a new coal mine in China, which today they don't need. They have money, they have technology, they have safety standards. But back then it was, that was pretty exciting to be a part of introducing some of those to China. We invested in a range of commodities and lithium and the rare earth minerals way before they were fashionable. And so we've had a lot of experience, but one of the ones that I was involved in that was really exciting was a company called Molycorp, which owned the Mountain Pass mine. It's now owned by MP Materials, but we acquired that from Chevron back in 2008. And the interesting part of that was Chevron acquired that mine when they acquired Unocal. And we approached Chevron soon after their Unocal acquisition, and Chevron really hadn't had a chance to assimilate what they acquired with Unocal and really didn't know much about that mining operation. And once they got their head around it, we approached them again, and it took about 18 months to negotiate a transaction that their biggest concern had to do with environmental liabilities with that mine and how to not have future liabilities come back and haunt them. And so we spent a year and a half putting together a program that involved a transition of those liabilities to us as the buyer, as Molycorp, but also to manage how they had those liabilities, and so how they were going to reduce their liability exposure over an extended period of time. So really fascinating time to be involved. We invested in a zinc mine in Portugal, for example, that allowed us, gave us exposure to Portugal, and on the back of that allowed us to acquire the Neves Corvo mine, which was a joint venture between Rio Tinto and the government of Portugal, and ultimately a fabulously interesting and fun investment to be involved with. So such a wide range, Rob. It's been a fun time to be in this sector over those 26 years or 23 years.
You meant obviously you told us your journey, what you'd done previously, and then got into the skills that you learned and experiences that you went through before joining RCF. What advice would you give any sort of, I suppose, junior person wanting to get into the private equity space in mining? What kind of advice would you give them? What kind of career paths could they be in, and the skills and experience that they need to then get into the private equity space?
It's historically we've hired engineers that have practical experience, have worked in the mining industry, and then perhaps they've gone back to school and got an MBA or got a mineral economics master's. Those would be sort of the historical typical candidates that we would bring in. I'd say it's harder and harder to find people with those experiences, especially in the US. I think in Australia we've had there are many more candidates for the job openings that we have, but in the US I think it's harder and harder because there's fewer and fewer graduates coming out of mining schools. So we've really focused on how do we find talented young people that have good technical experiences, sciences backgrounds, but also financial. And so we've expanded from just mining, metallurgy, geology backgrounds to business backgrounds, but we put our employees through a lot of testing and make sure that they're well suited for what we do. And I'd say that's paid off. But it's so the advice I'd give to a young person that wants to get into mining private equity is, ideally you get an engineering degree, work in the mines, get to know what the mining industry is about, and then do an MBA or a mineral economics master's degree, and that's a great background for what we like to see. But again, it's harder and harder to find those people. And I would say there's a great opportunity for those that want to go into mining, because I think, as you mentioned with Rowan Fendler in your podcast a couple of weeks ago, that there is going to be this massive shortage of mining people. And I can't remember the numbers, but I think if I remember correctly, there's 16,000 projected mining professionals coming out of schools, and there's a need for almost double that as we look forward to 2030, for example, and the commodities demand that we're projecting. So there's a massive shortage of people coming into the industry, and I think that's a great opportunity for a young person in high school or college trying to figure out what they want as a career path. Mining provides a great career opportunity, and we have to get that message out and try to explain to people why mining is a good place to go in the future.
Yeah. But following on from that, if you were looking at more experienced mining professionals that are in the industry and perhaps have a good significant amount of background in operations, again, if they wanted to get into the private equity space, is there again they might have the engineering and operational background? Is there a certain path that they could take to get into the private equity space if later on in their career that's an avenue that they want to pursue?
Well, certainly they could go off and try to raise their own fund, but I'd say that's a very challenging thing. First-time funds are very, very hard to raise. There's a massive amount of legal and just regulatory responsibility when you raise a fund, and so it's not an easy exercise to raise a new fund. So I'd say that the best way is to go to an existing fund, and there's not very many of us out there, but there are a couple of handfuls of different private equity firms focused on mining, and I'd say getting involved with one of those is probably the best way. And if you've got a good, strong technical background, I think one of the interesting ways to participate with a private equity firm is as an operating partner, or as somebody that the private equity firm, and we're looking for these people all the time. Good management is the hardest thing for us to find, and so somebody that has a good background that you can put into your portfolio company, and they're be there to represent RCF in our case, and help us produce a return, provide a return to our investors, I think is critical. So finding these operating partners, people that can step into these roles is a challenge to find good quality people. And there's fewer and fewer as we see retirements in this sector going. So I'd say that's the opportunity, I think, for somebody coming out of a mining company and that wants to get more into the private equity side of the business.
Yeah, certainly. And obviously I work in recruitment, so I see this all the time with obviously the skill shortage. Looking at more what's happening now in the market, in the financial markets, what are some of the more interesting trends you're seeing in the marketplace today and at the moment?
The energy transition is creating a lot of new opportunities, creating a lot of just new and interesting opportunities for investments and for people to participate in. So, for example, cobalt. You take cobalt; it's largely been dominated with production out of Central Africa. A lot of concerns about what we're going to do with cobalt in the future, and so identifying opportunities outside of Central Africa, from the DRC, for example, that's a challenge and an opportunity. there's an equal challenge going on at the, with the battery chemistry. Like, how do you design cobalt out of your batteries? And so you're seeing that. But from our perspective, really the opportunity is identifying those minerals that are critical to the energy transition, and how do we help provide those commodities into the future. So, I look at nickel. Nickel is dominated out of Indonesia right now, and are there opportunities for us to be non-reliant on a single country for such a high percentage of production? And so, we think there's great opportunities. There's some nickel assets here in the U.S., one that we're invested in that we think is a fantastic opportunity. But again, the regulatory environment in the U.S. makes it a challenge, and that's where we'd love to see some changes occurring that allow us to build these mines in the U.S. or in other countries that are a little bit more challenging from a regulatory environment. So the other mineral that I think is critical to the energy transition is copper. And I look at the demand for copper today versus what it's expected to be in 2027 to 2030. Now it's almost a 50% increase from what we're producing today, and we simply don't have mines sort of in the pipeline waiting to be built. So we've really got to accelerate the development of new copper mines or the expansion of existing copper mines, and that's going to take massive amounts of money and massive amounts of time. And so, when I look forward, I think there's some fabulous opportunities there for good projects to be developed in a fairly short period of time. So look, I'm as excited as I've ever been, for the future of mining. I think there's just a fantastic opportunity here for us. As I look forward to the next 5 or 10 years, I think we're in an unprecedented growth phase that will create some great opportunities.
How can mining companies make them, I suppose, themselves more attractive to private equity firms?
Oh, that's an interesting one. We have companies approaching us all the time about needing investments and wanting investments, looking for money. I mean, it's so hard to raise money right now in the sector. And so, we're looking at what differentiates it. And it all starts, I think, with the resource. The quality of the resource that they have is critical. Because you can change a lot of things. You can change management, you can change your process design, the flow sheets, but you can't change the resource. And so it all starts with having a high quality resource in our minds. But once you've got the asset, we find that so often the mining companies that approach us underestimate their capital cost. In fact, we did a study not recently, we've done a series of studies over the years that looked at the projected cost in a feasibility study versus the actual cost to build the mine. So the capital cost that was projected in the feasibility study versus what was actually incurred to build the mine. And we found that on average, it was about 25%. So mining companies were underestimating by about 25% the cost to build that mine. And that's critical. 25% cost overrun, capital cost overrun can destroy your project economics if you're not careful. So my advice to the mining company is really do your homework on what the actual capital cost is. The other thing that is always underestimated is the startup, the commissioning timeline. So quite often you'll see somebody projecting out, we'll have this mine up and running in 3 months. Well, we know if it's a complex ore body and a complex flow sheet, 3 months is just not enough time. And so you have to build in additional working capital and time to get to full production. And so just over the years, in our experience, we've built that into our financial models. And then when we compare our financial models with what the company is presenting, quite often they'll be quite upset that we've destroyed the economics of their project. But we think we've provided a realistic assessment of what that project's going to look like. And quite often, I mean, if it still looks attractive after we've done our financial model, then we get pretty excited about those projects and try to figure out then how to work with the management team to build it. So I'd say the advice to the mining company coming in is really make sure you're being realistic about your assumptions for capital costs, operating costs, startup timelines, metallurgical recoveries. All those, weigh into whether or not the project's truly economic or not.
And there's certainly a lot of variables to think about, and yeah, a lot of different outcomes. And I suppose that's where the difficulty lies.
Yeah, absolutely. There are so many different variables, and then you on top of that, you've got all the social license to operate, the ESG issues. Have you done the right thing from an environmental perspective, and are you being welcomed into the community where you want to build this mine? And so, a big part of what we do then is spending time, at the mine sites, assessing whether or not they're welcome, and if not, what can you do to change the narrative there? So yeah,
the mining industry is obviously critical for the whole energy transition that we're moving into. And again, I speak about this sometimes on with various guests on the podcast. What should the industry be doing to change the perception of mining? And I suppose the perception of mining or the brand of mining sometimes does bring negativity to our industry. But I suppose over time we can change that perception. What are your thoughts around what our industry can do to slowly change the perception of mining as a brand?
Yeah, it's such a critical issue. Gosh, Rob, I look back and I think of the mining industry's never promoted itself. Like here in at least in Denver, we get ads for oil and gas, the importance of oil and gas daily on our newscast. We'll get an advertisement for the oil and gas industry. We don't do that in the mining industry, and as I mentioned, we don't. Young kids growing up in the U.S. or the U.K. or, as we talked about before we started, even in Australia, some people aren't knowledgeable about the mining industry, and it's in their backyard. So we've got to do a better job of promoting the industry. It's got such a negative image because when you do hear about mining in the news, it's usually negative. It's usually a disaster of some sort, or tailings failure, or miners trapped underground, or whatever the case might be. And so we've got to start putting out good stories about what we've done and what has been accomplished on the positive side, because my father came from the mining industry, and he used to always tell me, mining is a noble industry you should be proud of. And I absolutely agree with that. And I think we don't do a good enough job promoting it. So what do we need to do? I think we need to get some of the senior mining, all of the senior mining companies to participate. ICMM is trying to get the message out. They're doing a great job with Roe at the helm there. Getting the message out, getting people in the mining industry to go to high schools or elementary schools and explain what mining's all about. We do that here. We'll quite often go into the schools. I've done it with my kids when they were growing up, where you explain what is mining all about. And you look around a room that you're in. It's either mined or it's grown, right? It's it's either wood or it's metals and minerals that go into these classrooms. And so I think we need to do more of that, from a grassroots level. But it's a challenge. It's a big challenge, and just changing that perception. I do think the fact that the governments are today recognizing that mines are critical to the energy transition, and we have legislation around the IRA or the CHIPS Act here in the U.S., or this U.S.-Australian agreement that was just reached earlier this week. I think when I look at that, all of a sudden mining is getting better news. And I think people are starting to realize that the energy transition doesn't occur without mining. And so I think we need to do more of that promotion and more of that to help explain to the general public why mining is so critical.
Yeah. It's interesting what you just said, where in the media around where you are in Denver, that you've got all advertising for oil and gas, but nothing around mining. Why is that?
I think part of it is budgets. I think when you think about the cost of running an ad on TV, it's very high. I think the oil and gas industry probably has bigger budgets to allow them to do that. But I also think that there may be a bit better organized. So it's not one single company. It's a group of companies, I'm sure, that have gotten together and said we need to promote the oil and gas industry. I think the same thing has to happen in the mining sector, where groups like ICMM get these mining companies, the 50 largest mining companies in the world, to sit down and say, okay, we're going to allocate 1% of our budget, whatever it is, to promote mining. And I don't think that the mining industry has been well enough organized to do that in the past. And I think there is a push to try to do that in the future, but it's a tall task. It's such a cyclical business. It's sort of feast or famine a lot of times, and I can only believe that that's going to be the first budget item that gets cut if when things are not going well. So getting any company to commit to something like that is going to be a challenge. Look, I think the other thing is, I don't think the mining industry really needed to advertise in the past, right? We just went about doing our business. We sold our product. People never really saw it. Saw it from the mine. They see it, of course, around their house, but they don't realize that it's a mined product. For oil and gas, you're putting gas in your car every day. You're getting a bill for your gas in your house. So I think the mining industry has always viewed itself as, we can just fly under the radar. Today, I think it's probably more important than it was previously that we actually promote the industry, not only to get kids to become mining engineers or metallurgical engineers or geologists, but also just to change the perception. Mining isn't a bad industry. It's a great industry, and we should be proud of it.
Yes, certainly. I've got a couple more questions. You're going to be at the Resourcing Tomorrow event at the end of November in London. You're going to be part of a panel. I wonder what the theme is and what kind of content that you may be speaking about.
Yeah, it's really about how do we attract people to this industry. It's this whole issue that the industry is going to grow a lot over the next number of years, and we just don't have enough people. We don't have the leadership in the pipeline to come up. So not only it's how do we attract double the number of people that are planning to that we expect going into mining to go into mining, and so how do we make it a more attractive industry? How do we attract minorities? How do we attract more women into the industry? And so part of that is, you look at the mine sites, they're very remote. They're not always the most pleasant places to live. Well, you look at what's happening in Australia, for example, a lot of the mines are being run remotely. And so you have these remote facilities in Perth that are running mines in, the Pilbara or in northern part of Western Australia. And that's all of a sudden, those are high paying jobs. They can be jobs where you only travel to the mine sites periodically, and that might make it, that will certainly make it more attractive. So I think there's a number of things we can do to make the industry more attractive that we'll talk about on that panel. I think there's some mining schools out there that are doing some really unique things. The University of Arizona, which is where I did my bachelor's and master's, has put together a new mining curriculum that's multidisciplinary. So if you get a mining degree, you actually take classes in the agriculture department learning about reclamation. You take classes in the medical school to learn about safety and health. You take classes in the law school to learn about the legal aspects, titles and contracts. So it's taken this multidisciplinary approach that I think is really going to attract people to the industry, to studying mining at Arizona, which I think is fantastic. And I'd love to see more of that as an example of ways to attract people.
Yes, certainly. And lastly, what's the outlook for resource capital funds over the sort of short to medium term? Is there particular objectives and goals the company want to meet?
Well, look, as I mentioned before, we're very excited about the future of mining, and so we're excited to attract new investors to this sector. A big part of what we do is educating investors that this is actually a really exciting time to be investing in mining. And so we're educating them about the mining industry and why it should be in their portfolios. So a big part of what we're doing is attracting people that wouldn't have thought about mining as to why they should be investing in this sector. The other thing is we're expanding, where a vast majority of our investors are US based. We're now expanding to where we're really, looking at raising money outside the US and attracting people that wouldn't think about mining as an investment alternative. So that's a big part of what we're doing at RCF. We see this fantastic opportunity coming forward, and so we want to be attracting as many investors as we can to this sector.
Ross, really appreciate your time. Thank you for sharing your experiences, talking to us about RCF and some of the topics that we covered. Obviously, branding, skills shortages, etc. If our audience wants to reach out to you, if they want to know more about RCF, how can they go about doing that? What social media platform channels can they find
look,
you
certainly
on?
we're very active on LinkedIn. We have our website, resourcecapitalfunds.com. Encourage anyone to go there. My contact details are on the website. I'm happy for anyone to reach out to me or to anyone else at Resource Capital Funds. And we're happy to talk more about what we do and why we're so excited about the future of this sector.
Yeah. And obviously, as mentioned a couple of times, you are going to be at Resourcing tomorrow at the end of November. So anyone that's listening, please go and get your tickets. And obviously you can hear Ross speak. And if you've got any questions that you want to ask him, then I'm sure he'd be happy to answer those questions if you approach him. So Ross, really appreciate your time. Thank you again. And I'll see you at my Resourcing tomorrow.
Sounds great, Rob, and thank you, for the podcast. You've got some really great people that you've talked to over the years. So thank you for what you do.
Yeah, appreciate that. Thank you. And following on from that, it's obviously the audience that I always like to appreciate, because without the guests, without the audience, this is not possible. So I hope you enjoyed this episode. As always, please keep sharing this content to people within our industry, but also people outside of our industry. As Ross has alluded to a few times, mining is essential for us to evolve, and we need to improve the branding of our industry. So we can only do that by your help and your support, by sharing the message, sharing these podcast episodes. Get them to have a listen, see what their thoughts are. They'll probably come back with a lot of questions for you to answer. And obviously you'll be well equipped to answer those questions. So as always, appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.